Hello, my name is Steve Bigelow with the Candlestick Forum. We're starting to see some potential reversal signals in the markets. Today, we had a shooting star following a hanging man signal up here in the overbought area. That doesn't necessarily mean this uptrend is over. That pretty much tells us that if they open things lower tomorrow, at least they're probably coming back to test the T-line, which means there's going to be a few days of consolidation before we can see whether the T-line is going to act as support and take things back up again. So get ready that if you see the pre-market futures trading lower, you might want to start taking some profits on positions immediately. You saw a bearish harami in the NASDAQ today up here in the overbought area. Still gives us the T-line, or I'm sorry, the doji rule, that if they open it positive, we're still in an uptrend. If they open it lower, more than likely they're going to come back and test the 50, which would probably correlate with the T-line catching up. So same scenario. If we see the pre-market futures showing a weakness tomorrow, look for consolidation back to the 50. Also, you can see how there's kind of a resistance level up here that everybody's watching. And it's not unusual at all to see something come up through a potential resistance level and then come back and test it to see if it's going to act as support. So what you want to try to do in these type of markets is get the strongest candlestick signals. Obviously, in Moderna, that kicker signal has continued even today when the market was a little bit soggy. But here's a very simple analysis of this trend. Notice that even on bad hair days, they couldn't close it below the T-line. The T-line is probably one of your most effective tools for identifying not only what is going on in investor sentiment, but it tells you where the natural support and resistance level of human nature is. So the combination of those two is a strong buy signal and a close above the T-line. You can stay long until you see a candlestick sell signal and a close back below the T-line. So the first thing we want to identify is the strongest signals. Because even on a lethargic day, our recommendation on PETQ is based upon this kicker signal gap up through the 50, off the T-line, telling us we're in an uptrend until we see a sell signal. And the bullish flutter kicker signal is a derivative of the kicker signal, which basically has a doji in it. You have a bearish candle, the next day they gap up and do a doji at the previous day's open. And remember the doji rule, it's very simple. If it opens positive, it's likely that the trading is going to continue in the direction of how they open after a doji, meaning you have a positive candle. And if you pulled out this little flutter, you have a kicker signal, one of your strongest signals. Does it always portend this type of move? No, but the nice thing about candlestick analysis is that if you're buying the signals, you're putting yourself in positions where the probabilities of the uptrend being either in this manner or in one day is greatly in your favor. So the more aspects you can put into your analysis, because human nature works the same way time after time, your fry pan bottom, your best friend signal, your bobble breakout. When they break out through a resistance level, where's the next target? The next major moving average. Take profits, look where they pull back to. Right smack dab to the T-line and start back up for your next bobble breakout. You could be buying here with much or great confidence because the bobble breakouts are not only an identification of what's going on in human nature, but it's also everybody else that's not using candlesticks see that the resistance level is breached, they start buying. So this becomes a very high probability trade setup. So we can use that information. Again, 2+2 analysis is identifying the signals and the patterns. Here's a cradle pattern. the headboard, the crate or the bed, and the footboard. And the footboard started with a best friend signal, one of your strongest reversal signals, number one. Number two, it closed above the T-line, a very strong indication the bulls are in control. Now you can make an assessment. Where's the next likely target? Up in this range, a good percentage move. That's your first target. There's your second target. So the information built into candlestick analysis is the signals, the patterns, and where it's being affected by the T-line. Again, the T-line is the natural support and resistance level of human nature. When you combine it with candlestick signals, that combination is a very strong indication of which way prices are going to move. So when you have patterns like this, like in Sava, there's our slow curve, a bullish engulfing at the T-line. This is our expectation. We're heading for much higher levels. So again, the combination of the T-line and a pattern. Notice when they consolidated DWAC last week, where it came to, right smack dab to the T-line. Then you had a bullish piercing signal right here at the T-line. It opened right on the T-line, went higher. This is very good visual confirmation that your J-hook pattern is now in progress. So whether you're trading off the daily chart or looking at big breakouts, wondering where should I buy, that's where you flip to the 10-minute chart, because candlestick signals work as effectively on any time frame. If you see this breaking out, you can be buying here, you can be buying here, you can be buying here. And what's our criteria? You stay long until you see a candlestick sell signal, and the caveat that the further away you move from the T-line, the higher the probability it's going to come back and test it. So here is the area where you start taking profits. What's the worst case scenario? It comes back to the T-line and does a J-hook. You can always buy back in, or you're out of the trade when you're supposed to be. So this combination is extremely effective, whether you're a swing trader, a long-term investor, or a day trader. Using the combinations, the T-line and the candlestick signals, greatly enhance your ability to analyze what's going on in a price trend. So you might want to join us Saturday, November 19th. We're going to be doing a full day training on how to use the candlestick signals and the T-line effectively for whatever time frame you're trading. What you gain from these type of trainings is a lot more insights as to what makes prices move and prices reverse when they do. That'll be it. We'll see you in the chat rooms.